All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for Monday, the 12th of August. This will probably be a pretty quick one today because we're in the because there's not a lot to talk about. But I guess I don't want to give it away. So if I was going to ask you or start off today, what could you tell me that our market is currently doing? If I was going to ask you about our market, what could you tell me about our market and what our market is currently doing? Excuse me. Ooh, I like that one. That's a good one. So we've got three of them. I like it. So here we go. Waiting for the Fed to act. Waiting to go down again to retest the lows because that's what market is doing. Lee Maxwell trying to figure out what comes next. You know what? All three of those, excellent. Every single one of those are very excellent comments on what's going on. So let's make a quick run down to the Dow. Technically speaking, we are no longer bullish. We are obviously bearish. And falling from 41.4 down to 38,500. Let's do a little bit of math. 41.4 minus 38,500. 41.4 minus 38,500. Geez, can't type it in. Minus 385. 29. That's a pretty big drop. Almost 3,000 down. So the NASDAQ lost roughly 7%. It's still bearish, but the 50-day is at 39,492. We breached above that on Friday when we couldn't get above it on Thursday, and it did not stay above it today. Tomorrow will be a very important day for the Dow to see if it can reclaim the 50-day simple moving average or if we head back down. So that'll be something that we need to be paying attention to make sure that, well, protection will have to be going back on if we are unable to hold or get above that day. Now, we might do a little bit of building a base here, which would also be pretty neat to go through for this week, but something to definitely pay attention to. The S&P 500, still bearish. If you look at the S&P 500, what comments would you give to me on this one? Just in general, we know it's bearish. What else could you give me on this one? And you'll notice I snapped this when it was up at 0.23. As the market closed, we actually finished completely flat, 0.00. So actually, you know what? Let's just go and let's take a peek at that one. S&P 500. We'll let it recoup. Continue. Oh, I'm sorry. The chart's the same. The change was 0.23, a 0.00% return. So retracing to the 50-ish, it's a doji. It's pretty close to a doji, but not quite. A doji will be completely flat, but close enough, right? No one's told me it can't get over the pivot point, the S1 support level pivot point at 53.85. But someone could also tell me that it has room to go up another 100 points to the 50-day simple moving average of 54.48. So very interesting, right? We've got another 100 points before we hit a resistance level. Well, Kevin, we do have an S1 support level that could be resistance, but that's just a 30-day trend. Please don't think that pivot points are true support or resistance levels. They're not. They're too short term. It's just something to get a general idea where the market might go to. And the 50-day will be much more important than a pivot point. All right, and taking a look at the NASDAQ, well, actually, let's do a quick look on this one. 5669 all the way down to minus 5119, 550 divided by 5669. We had a 9.7% pullback in the S&P 500. All right, let's take a look at the NASDAQ. Taking a look at the chart of the NASDAQ, what could you tell me here? And boy, Maud, that does look like a closer doji than the S&P 500. I'll give you that on both of them. Doji City. So if you do see a doji, this could be, in all honesty, this could be a reversal. Dojis usually call a reversal, but what do you see on the NASDAQ here, other than it's technically bearish? And the NASDAQ, while you guys are typing something in, 18,671 minus 15,708, 2,963 point drop divided by 1.8. Let me do that again. That didn't make sense. 1.8671 minus 15,708 is 29 divided by 1.8671 is a 15.8% drop on the NASDAQ. Good one. Hit support at the 200-day. Very telling. Found support, hit support, actually went below it, right? Definitely went below it right here. And we've had about a week upward trend. I like it. So, kind of interesting because has anyone noticed what we've been doing in accounts? Basically starting last Thursday. Anyone notice what we've been doing in accounts? Listed right here, we started taking protection off based on technical analysis. Well, Kevin, it's not bullish. No, it's not. But we hit those lows and oversold on both the Williams percent R, the RSI, and we have played some of those accordingly. In fact, kind of interesting. The first one we took off was Verizon. Fighting off a bit of a cold. We took Verizon off about a week ago after good earnings and the stock went down. Right around $39.68. And we've been rewarded with it going back above the 50-day. A little on the premature side. And our line in the sand on Verizon is the 50-day simple moving average at 40.35 and the round number of 40. Between that 35 cents, we're going to make a decision on what to do with Verizon. Anyone notice what we did on Under Armour? Kind of a, I'm going to call it a ballsy move. But we actually ran Under Armour without protection from its earnings. At $6.47, we took off its protection thinking the downside would be $6.17. We figured worst came to worst, we had maybe a 29-cent downside. And it popped all the way up to just above $8, hasn't held it. Little bit of a give back today, but our expectation is for it to run up and test that $9 mark in the near future. Overbought, we see it. We possibly can add $8 puts to run it from $8 down to the 200-day simple moving average of 743. But what a pop after putting in more shares twice in the last 6 months. Really neat to see this moving higher. Last week, for all you that had Micron, we put new shares of Micron on right around $90 and change. $90 in low change, like $90.40. We took puts off today for a profit. And looking at the chart on Micron, pretty neat from 157.40 all the way down to $90, $93. We made some huge money on Micron. Easily we could have added a couple hundred shares, but we decided we're going to wait. We'll add another 100 shares as Micron breaks the 200 around 101.83. Right now, we're just trying to catch a bounce from the $90.30 to 46-cent range up to 100, 101. Pretty interesting on this one. NVIDIA. NVIDIA is slightly coming back. 140.76. A lot of you got into video at 125.25. I think NVIDIA 115 long call we placed. Great timing on that one. Not ready to add shares on NVIDIA because it's in no man's land. Not sure we have enough profit on NVIDIA to put an extra 100 shares on. But we like it. Apple. Spelled it wrong. Apple, little drop down. When it broke the 50-day, we took off protection on Apple all the way up at 225. We did it for a profit. Nice to get a $2.60 to 80 cents. I don't remember exactly, but nice to get a profit protecting Apple through its earnings. And for the second day, it's held the 50-day. We like that as a strength for Apple. Disney, a little bit opposite on Disney. Disney is at below a low. We're not ready to take a chance on Disney, even though it's getting upgrades, even though it's getting price target increases. Disney's one that we're trying to use the base of 83.91, which is really 84, as maybe our jumping point to take off long puts. We might feel more comfortable seeing a double bottom test on Disney at $84 roughly, and then seeing it run back up to 96 or 95, which will be that 50-day simple moving average. Definitely oversold, but we need to see some strength in the market. We might actually just need to get through August before the market will build some momentum for a rate cut. The middle of September, I believe, is when we have that rate cut. And Baidu earnings, I believe, next week. Short answer, it'll probably go up very quick, and you've got to be ready to protect it back on the way down. But it'll be interesting to see where we go on Baidu. Yes, we've taken puts on and off a couple different times, and that's just what we do. You should notice your account starting to become more and more cash heavy. We mentioned it a couple weeks ago, but right now we are working on making your accounts more cash heavy by booking long put profits. Or you can call it protective put profits, where you spend money to buy insurance. And our thought process is adding more shares at lows before the September rate. I called it a hike, it's a cut. It's a cut, it's a rate cut, not a rate hike. One of you guys should have pointed that out. So that's what we're doing. Really, we're on the process of finding out if we've bottomed. So let me put that in here. We are in the process of finding out if we bottomed or if we are going to have a double bottom. I would tell you it most definitely will not be a triple bottom, because the excitement and the run up before a rate cut, which will be next to meaningless for the market, there will be some exuberance. Don't be surprised in September if it's a sell the news type of opportunity. That will most likely be our expectations, is that if we get a rate cut, especially if it's going to be a 50 basis point, which I'm not sure I can see them doing, it would be better to be, do two 25-point cuts this year. One obviously in September, which they have choreographed that they will most likely do no matter what. And then one in December. November doesn't seem like the ideal time. Maybe Powell will surprise us and do a 50-point. All right. People are noticing Disney had great earnings, and they're one of the most oversold stocks. It's very interesting to see when some of these other ones are going to bounce back. There are other oversold stocks here that I thought was pretty interesting to pay attention to. They have a second chart on some overbought stocks. Lockheed Martin is in that one, which it still has room to run. Northrop Grumman, Income Realty. Although you see a rate cut, Income Realty might be a really nice dividend payer to jump into. Just interesting, I felt, though, that people are noticing Disney had a great quarter, and they're not getting the love. And they're getting analyst price targets that are getting raised as well. So look to see here immediately. Someday, Disney's going to move not like a blue chip. They're just going to move $9, $10 in a day. People are going to go, oh, what happened? And it's just going to be some type of institution saying, hey, enough pain. They've got the growth. They're going to be heading much higher. All right, big picture, nothing really interesting in the big picture. They're trying to link together, I don't know, they're trying to link together currency movements. Not doing a good job of it. Not doing a good job at all. When they talk about what it all means, I found this interesting because their comments were the Russell 2000, which houses small cap companies with a mostly domestic orientation, was down 6.5% and was the biggest index loser last week. So all the stuff that they talked about pushing you into, stuff we talked about 3 or 4 weeks ago, oh, go small cap. I think it was 3 weeks ago I did the commentary. Big money doesn't go into it. It's just not there. It's almost like they were suckering the small guy into small cap so big guys can get out. It's just not a big enough index that these big guys can throw money into it. It was a small time win for them, suckering the suckering the dumb or the uneducated investor into buying something that they pointed out. So it is what it is. That's kind of what happens when you just listen to the TV. But again, 3 weeks ago, I tried to give you guys the best opportunity to understand, hey, anytime you're seeing the Russell 2000 go into this, probably not your best investment to go into. Down 6.5%. I'm glad you guys listened to me. All right. Worst sectors. Kind of funny. You look at the S&P 500, consumer discretionary, information technology, energy, industrials, financials, those are usually the safe havens. If those were the worst sectors, what was making money last week? If those were the worst sectors, the ones that usually people run to in downturns, consumer discretionary, energy, right? Information technology, financial, industrials. Where was people's money running into last week? And there are 2 answers to it. Anyone know? if you're going to be looking at the market, little bit of a scare, where was, maybe there are three answers here. Where was people's money running into the last couple of weeks? And I gave you some examples of it last week. So NVIDIA, so yes, in fact, there was a push on some Magnificent 7. Definitely give you that. Where else could people's money have been running into last week? And no, it was not bonds. You know what, Mod TLT? I didn't see that, but I didn't see it because I didn't look. That doesn't mean that they might have went to treasuries. The bonds didn't show that though, and there was some down days in treasury, but maybe. I actually didn't check. I didn't know that. Something we did see, and I tried to give you guys an example of it. A lot of people were running to cash, taking big losses, losing all of their gains for the year, if not more. And then I did find it interesting that, how would I say this? Some people didn't know what to do. Not that they didn't sit there, but they did go into more dividend paying versus bonds. So that's where I saw movements of cash last week. I didn't check the TLT. That might be an interesting one to look at. The inflation adjusted treasuries and so forth. But for the most part, people went into cash, moved in some dividends, and some of the Magnificent 7 had some nice pops last week in the downtrend. All righty, here we go. Working our way on through my guts of stuff. Earnings coming up for Dollar General and Baidu towards the end of August. Micron the end of September. Target here pretty soon. They'll start off the sales companies. We already went through the banks for the 2.5 weeks. We'll have 3 weeks of retail sales companies coming up here starting next week, I believe. World markets end this week. I'm going to go lower again, following the trend. But Kevin, you said the trend was going higher. So I actually am going to suggest we go higher. And it's going to be higher to flat, but that 100% depends on the PPI numbers. Looking at what we have coming up this week. Earnings, next to nothing. Home Depot, 10-cent Music. Wednesday, we've got the Cardinal Healthcare, Cisco. Thursday, Walmart and Tapestry. Economic reports, PPI numbers, which should be pretty tame, yet still showing a 0.2% increase in inflation. Core numbers on Wednesday, and I warned you guys a couple weeks ago, the big one might be retail sales. You heard the scare, the fear of, a possible recession. We're at least 6 months away from the true definition of a recession. And we had a surprise increase of a 2.8% GDP when they expected it at 1.9. So when people ask me the last couple of weeks, how close are we to a recession? There's truly no technical indicator out there except for some companies doing some mass layoffs. But that doesn't equal a recession. It just means that the companies that did some mass layoffs. Dell laid off 12,500. But there's no indicator of a recession at this time. If retail sales is down and down significantly, then yes, that might be the push where we might retest those lows, spend a week going down, then we'll run higher into the end of August. Monthly options expiration are on Friday with the building permits, housing starts. As I told you, looking to trade, we've taken a lot of protection off, but looking to add it back on very quickly. Our key is to see if we're going to do a double bottom or if we'll break above some moving averages that'll push our markets higher. I found the articles on the Warren Buffett selling stocks, a lot of them. It was Apple and Bank of America. Notice during this selling time, though, that even though Buffett was selling, a lot of people were buying in. So a lot of people get scared if Buffett sells. For these two particular stocks, it looks like he just had to adjust his portfolio. It's not that he's selling them because he doesn't like them. It's not that he's selling them because he's expecting a recession. He's just selling them because he was overbalanced by making a killing on these particular stocks. You've got to rebalance your portfolio every so often. That's all Buffett did. Markets are counting on the Fed to head off a recession by rate cuts. In all honesty, that does help, but we have so little. If they're not going to do a full percentage point, 100 basis points, it won't head off a recession. But again, there's no technical indicator right now that is saying we're in a recession. In fact, 2 or 3 weeks ago, our GDP number, as I said, came in 9/10, almost 1% higher than expected. In which case, we're nowhere close to having 2 negative quarters of GDP quarter over quarter. But I did put the information in here for you guys to read and make your own decision. In fact, apparently I put it in twice. I probably should take one of those off because it might get a little confusing if I'm doubling up on things here. I put the Disney article in here, how it's raising prices, and here it became profitable. Its cash cow became profitable for the first time. When the market goes on sale, don't run from the exits. This might be a great time to add some more Disney. We've held off to make sure that it moves. Interesting article from Morgan Stanley on the Mason 7 stocks are cheap. And a buy after sell off is in the works already, would be the best way to say it. As really, there's no recession in Morgan Stanley's near future that they see either. So with that said, I think I've got one more. Oh, found a couple interesting articles. Consumer credit card debt hits an all-time high of 1.14 trillion, the highest we've ever been. Might explain why some of the credit card companies are doing better, but you'll notice as you read the article, they have a 9.1% default rate. Last time we heard that, the market tumbled significantly, calling a recession. Never happened. And I just found this one article, being someone that owns cows, AOC and all those dummies want to kill cows and not have our meat market be what it needs to be, when the methane has come up 4 times higher than expected through our oil and gas sites. This is particularly one that was found here in Utah. So little worrisome in the basin, the vernal basin. They call it some other basin. I don't remember the name of it. But in our oil basin here we have in Utah, large numbers of methane. Dang, those cows are farting a lot, or maybe it's just on how they want us to burn off the methane versus keep it or capture it to sell. So interesting article, just have it there for you guys to read. What questions do you guys have for me that I can answer for you tonight? What questions do you guys have that I can answer for you tonight? I'd like to give you maybe 5 or 8 minutes or 10 minutes, or as many questions as you have. Any questions you guys have that I can answer for you tonight? The permanent basin is for you guys. Utah has a different basin out here. Our oil basin, I want to say it's called the Uinta Basin. It starts in Vernal, but in Utah, we are not the Permian Basin. We've got a different name for the basin that stretches through Utah into Wyoming. And again, I think it's funny. AOC wants to kill cows because they fart too much methane. But maybe again, it's our oil companies and they're working on it. So it'll be interesting to see. Interesting to see what they say. So yeah, Utah has an oil basin out here that runs into Wyoming. And for the life of me, I'm brain farting. I don't remember what the basin was, but starts in Vernal, runs out through Wyoming, and it's pretty oil rich. What we don't have here in Utah is the refineries. No major refineries, so we ship all this crude that we harvest here in our own state, ship it down to Texas, refine it, ship it back up to us. Our gas prices stink for how much oil we send down to Texas. I won't make that comment, but someone may have commented here. Pretty soon you might see baked beans and chilling beans go off the shelves, because if people like us fart, that's also bad for the environment. So let's ban any type of beans from the environment to help save our the methane gases that are so bad in our country right now. I don't see any questions coming in. That's where I'm at tonight. Guys, I appreciate you being here. I hope tonight's webinar was helpful. I also hope that it helps you put things into perspective. Again, my goal is to have this webinar edited and up first thing by tomorrow morning. Please continue to go to the myhurleyinvestment.com and read through the articles. It just gives you an idea of information that's coming out to you so you can help understand what's going on and to see what might need to change. With that said, Rich, Pollock's account had a different email and Bruce's was the same, so they both should be receiving their invites to the webinars. Might want to ask them to check, obviously, their spam, but they're both registered, and Mr. Pollock had a different email address that we changed and put in, so they should be getting these. All right, guys. Hey, appreciate you guys being here. Thank you for your time today. We look forward to seeing you guys in the near future. I'll see you next Monday. Keith will be taking over on Thursday for you. Have a good week, and know, yes, that if things start to look bad, protection will be on immediately. All of you should notice a nice increase in your share count for Micron, a nice increase in your Under Armour, and a pretty big increase in the cash we've created by capturing this downward movement with those put protection options. Guys, take care. See you next Monday. Have a good evening, and I'll talk to you then. Bye-bye.